Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories at 1:30 p.m. this Tuesday afternoon. Key indices recover slightly after stocks swing between losses and gains in early trade. Midcaps in line. Global uncertainties linger. Cement FMCG stocks gain while realty and energy drags.
GAIL and GSPL gain after sector regulator. PNGRB revises gas pipeline tariff norms. Incremental tariff sharing is scrapped. Transmission losses taken note of and annual escalations built in.
Stocks of digital players like Nykaa and Delivery take a leg down as anchor investors selling via block deals and fears of more in the offing cast a shadow.
India Bulls real estate down nearly 4% as the NCLT hearing on its merger with Embassy Group is postponed, and this was announced yesterday. All right, those are the top mid-caps which are in focus today for our markets. Steady as it goes, it's up 51 points on the Nifty, and the mid-cap side of things also looking good in line with the benchmarks. Banking names, the PSU banking space that continues to do really well, so that is the top gainer as far as the sectoral breakup is concerned. And we also have a couple of these stocks in the Nifty pack, the Tata twins, that is the Tata Motors stock and Tata Steel as well. Those two are doing really well in trade today, but comparatively quieter today, Reema. And we don't have too many cues as we used to have during earnings, but for now, steady moves on the market.
Indeed, a bit sluggish, right? But let's get to our segment, Midcap Movers. Vivek is joining us to take us through the midcaps that are moving around in trade. Vivek.
Well, thank you. Quite a few stocks, from different sectors today are actually catching up, and what you're actually seeing is in the 52-week high list, quite a few stocks that we haven't spoken about recently. First on our list, JK Bank, the private sector and banking space continues to be in focus. Next on our list is Castrol. After a period of relative underperformance for this particular name, today the stock has hit a fresh 52-week high. Lumax Industries today on strong volumes moving upwards, and Kalpataru Power as well. This particular stock continues to do well today at a fresh 52-week high. When you're talking about stocks that have hit the volume buzzing list, first we have Copran today. This stock is up on very strong volumes after a period of underperformance, 3 to 4 sessions of continuous selling pressure. ADF Foods, select funds are buying this particular name. Gandhi Special Tubes, market participants are hopeful that there will be a corporate action in this particular name, and which is why you're seeing this particular stock move higher. And IRFC continues to move higher in the session. On the other hand, on the losing side, we are looking at stocks like Max Financial. Now, this particular stock saw a significant block deal today. It'll be interesting to see who the sellers were here. Rosari Biotech too has hit a fresh 52-week low in the session today. Somani Ceramics and Emphasis, this mid-cap IT stock continues to languish at a fresh 52-week low in today's trading session.
All right, Vivek, thank you so much for joining us. A lot of stocks in the broader markets which are moving around, and with that, we'll move on and welcome Aditya Agrawal, who's the head of research and investments and Invest for Edu, for a technical check on the markets. Aditya, good afternoon. Thanks a lot for joining us. Well, as we are discussing, quiet, sluggish, but yes, Nifty is still in the green, up around 50 points. What are the charts suggesting for today, rest of the week? What kind of moves can we expect?
Good afternoon, thanks for having the show. So clearly, it's a bit of a consolidation that's going on in our market. So if you take a look at the way the broader markets are behaving, they also have entered into a consolidation phase. And the global markets too seem to be in a consolidation phase. And there is stock-specific activity which keeps on going. For the day, maybe markets could bounce back further from here as well. Market has taken support at 61.8% retracement level in the recent correction. That happens to be 18,150, 18,140 odd levels. So traders can look at putting a stop loss closer to about those levels and look for targets of 18,300 to about 350 on the upside. Again, on the upside is capped between 350 to about 450 on the upside. So I don't expect too much of a movement on the upside, but yes, range-bound movement on the Nifty as well as on the Bank Nifty should continue, while stock-specific activity is likely to happen in the day as well.
Aditya, let's talk about the stock-specific activity, right? Because the index is very ranged, and as you said, the upside seems to be capped at 18,350 to 400. What would be the stocks that you would pick for trade now?
I've got a couple of buy recommendations, in fact. So one is from the FMCG space, Britannia. After a sharp up move following decent set of numbers, stock went into a consolidation phase. And today it's breaking out from that narrow consolidation phase. Volumes are pretty healthy. So my sense is the uptrend will resume from here on in Britannia, and On the upside, can test levels of 4250 to about 4300 as well. On the downside, 4100 is a good stop loss. So traders, in fact investors too, can start nibbling into Britannia at current levels. Look for targets of 4250, 4300 on the upside. The second stock recommendation is from the Siemens pack. In fact, after a good consolidation and a bit of a correction, the Siemens stocks are looking good and upbeat at the moment. So Dalmia Bharat is something which is looking very attractive on charts. So one can go ahead, buy at current levels, look for targets of 1800 on the upside, put a stop loss at 1675 on the downside.
Okay, all right. Aditya, thank you so much for joining us and taking us through your individual technical picks and the outlook on the market as well. With that, we'll slip into a break now. Up next, we'll be joined by Madhusudan Bhagaria, who's the Chairman and Managing Director at Filatex India, to discuss the Q2 performance and the business outlook. Welcome back. Still tuned into Midcap Radar on CNBC-TV18. We are focusing on Filatex India. The company reported a weak quarter with an over 60% drop in profits, and high raw material prices and expenses weighed on margins as well. The company is a manufacturer of polyester filament yarn and makes polyester chips and narrow woven fabrics, among other products. To discuss what went wrong in Q2, but most importantly, what is the outlook going forward, we are now joined by Madhusudan Bhagaria, who is the Chairman and Managing Director at the company. Mr. Bhagaria, good afternoon. Thanks a lot for joining us. Well, Q2 did see an impact. You have listed things like there was a lot of dumping by Chinese players as well, and there was an impact on margins as well. Going forward in Q3 and Q4, what kind of outlook do you have in terms of demand and in terms of raw material pressures as well?
Yeah, good afternoon. There is a dumping from China, and the reason for dumping from China is basically China has adopted a zero COVID policy, and because of that, they are having huge lockdowns throughout their country. So their internal consumption has gone down drastically, but their production, they have not dropped to those levels. So the producers are trying to dump wherever they find a market. And to stop that dumping and the goods coming to India, we have to drop our prices. So there is a growth in the volumes in this quarter. We have volume growth is almost 22%, but the margins have dropped drastically because we have to compete with the imports coming from China. And I think third quarter would remain maybe similar or slightly better. From fourth quarter onwards, once Chinese have their new year in early Jan, after that, I think they should open up and their consumption and everything should start. Also, they are also contemplating reducing their capacity. Even after dumping all over the world, they are not able to release the pressure because already they are almost 75% of the world production in polyester filament yarn. So by dumping also, they are not able to release. So they are hardly able to sell 3 to 4% more by dumping. So I think they have realized and they are resorting to production cuts. So that will help in improving the margin. The good thing is that there is a lot of appetite in the downstream because even in spite of dumping from China, we have been able to sell our full of production. And also our exports have gone down because they are dumping everywhere in the world. So we are becoming uncompetitive in the world. So even that volume, the Indian downstream is able to absorb. So there's a good demand in the downstream. So as and when these things gets corrected, I think the margins will jump up. So hopefully fourth quarter should be better. And once China opens up, then FY24 I see to be a back to normal year.
Okay, that's the hope, sir. We don't know if China is going to open up in Q4 of FY23, but we take your point. Could you tell us what are the current prices of polyester filament and how much lower would it be compared to, say, same time last year or compared to pre-COVID levels?
See, our prices depend on the raw material prices, so I can tell you about the margins. So our margins, EBITDA used to be around 14-15% or 15 rupees a kg, has come down to almost like 5 rupees a kg. So we have dropped our margins by almost 10 to 11 rupees a kg. So that is the situation.
Okay, and is this confirmed that China is going to be bringing down the production, lowering their capacity, or is this just the hope?
I think they will be lowering their capacity because even after dumping everywhere, they are not able to still sell more. And because otherwise they were always selling 85% of their product in the local market. The exports were hardly 12 to 15%. So they have not been able to substantially increase that market share in the export even after dumping. Because already they were catering almost 80% of the export market.
Mr.
So
Bhag.
it is not helping them. They have tried it and now they are cutting down the production. So I'm sure because they have a financial year ending in December. So after December, they would cut down on the production drastically. And also Chinese New Year is approaching where they normally cut down good production volumes.
Okay, so that is something we'll watch out for. In terms of your capacities, I was looking at your investor presentation. You have annual production capacities of 4,01,040 tons. That is post expansions in FY23. So how much additional capacity is coming on stream? And what is the current capacity utilization with the newer capacities? What could the initial capacity utilization be according to you?
See, this capacity has come in stream somewhere in September this year. So we have added around 43,000 tons more this year. We had a capacity of roughly 3,60,000, so we added another 43. Our capacity utilization is onwards of 95% in yarn. Now we are not selling any chips anymore. So 100% we are converting to yarn in-house. So we are out of the chips market. And capacity utilization for the old is almost close to 100%. The new one we are doing around 85 to 90%.
Okay. 85 to 90% in the newer capacity. All this was... Go ahead.
No, just wanted to get a sense then on the top line, or even in terms of volumes, if you could give us a picture. You said the volume growth in Q2 was about 42%, right? We do not...
22%.
42, right?
22.
20. Okay, 22. Is this the volume run rate which should, continue in Q3 and Q4?
Yeah, it would be very similar in Q3 and Q4.
All
Okay,
right.
got it.
Okay. Can you give us a sense of what is the total contribution from value-added products? Do these come in at a higher margin? And going forward, since we are looking at the pricing differential because of dumping by Chinese markets or Chinese players, will you keep increasing this particular percentage and that in turn will improve your margins?
Yeah, we will keep increasing. Right now, we are not increasing, but we have some plans which will get crystallized in FY24. So we will add more value-added products by then.
But how much is it right now as a
right now as a percentage, we should be around close to 70% in the value-added products.
70%.
70.
Okay.
Okay. So you also have cash of about 240 crores on your books. Could you tell us what the plans are? Because you already have a capex which you have initiated and is close to completion. So what is the plan with respect? Yeah.
We will retire some debts as of now, and we need to do a capex on our recycling, which we are developing, the recycler technology which we are in-house developing. So we will commit a capex for that maybe by the FY23 end. So we are conserving some cash for that also.
What is the debt on your books and how much do you want to bring it down? And any number on the recycling capex which you're planning?
I think recycling capex would be close to 200 crores.
Okay.
And we will bring down below or around 300 crores of total debt to around 300 crores.
Okay. So recycling capex at around 200 crore rupees and debt would be around 300 crore rupees by the end of this year.
Right.
Last question before we let you go. What is the percentage of exports in your total revenues? And export markets, you did indicate about how they are doing. You expect it to improve?
It all depends when China will improve, but right now their prices are so low that we can't meet the export price expectation. So exports we used to do around 30 to 15%. And in this quarter, we have only been able to do 3.5–4%.
Okay. All right, Mr. Bhagaria, thank you so much for joining us and explaining the industry setup, how it's impacting players like yourself. So China dumping is something which is hurting realizations. Demand, though, continues to be really strong. A quick programming note: to fully commit to the cause of bridging the gender parity gap at the workforce, CNBC-TV18 is all set to lead charge with a one-of-a-kind mega initiative, Future Female Forward, the Women's Collective. Presented by HSBC India, the initiative will be officially launched through an exclusive on-ground event on Friday, November 25th at the St. Regis, Mumbai, in the presence of Shireen Bhan, who is the managing editor CNBC-TV18 India, Mr. Hitendra Dave of HSBC India, and other women leaders of India Inc. Also in attendance will be some of the most influential voices from the business, entrepreneurship and entertainment spaces as well. So don't forget to tune into CNBC-TV18 on Friday, November 25th, 5:30 p.m. onwards.
Welcome back. News coming in on Dr. Reddy's, where the company, along with Syngene, Bristol Myers Squibb, has been named as a defendant in a complaint in a U.S. court. The complaint alleges that the companies restrain competition and maintain a monopoly. This is for the drug Revlimid generic. So this is negative news coming in for Dr. Reddy's because it has been named as a defendant in a complaint in the U.S. court. The complaint also alleges against improperly delayed generic entry entirely until 2022. Ekta standing by to get us more details and provide the context to this particular development. Ekta.
Hi, thanks for that. Well, yes, this has to be, this deals with the big blockbuster cancer drug Revlimid generic, which multiple companies had settled with the innovator BMS, which is Bristol Myers Squibb, as well as Syngene, in order to launch it on a more, on a more staggered basis starting 2022 and sell a limited or volume limited amount up till 2026. So the likes of Natco, remember, in November earlier this month, on the 14th of November, in fact, was sued by the likes of Walgreen, along with BMS, as well as along with Teva. Teva was Natco's partner. At that point in time, Dr. Reddy's had corrected significantly because the street knew that there will be more litigations which will be coming with regards to Revlimid generic. And that's exactly what has happened. So, for example, the news today is that Dr. Reddy's, along with Syngene, as well as BMS, which is Bristol Myers Squibb, and several other generic companies have been named defendants. They have been named defendants in a complaint which was filed on the 18th of November in New Jersey in a district court. And the complaint has to do with regards to the settlement terms on Revlimid generic, because that resulted, according to them, improperly restraining competition and maintaining a shared monopoly. And what this basically alleges is that it delayed generic entry till 2022, limited competition till 2026. This particular complaint is on behalf of indirect purchasers. They are seeking damages for overpayments as well as equitable relief. Now, Dr. Reddy's has said this allegation lacks merit. They will vigorously defend the litigation. Now, Dr. Reddy's is in focus and could be susceptible simply because of what could happen in the litigation is because they have exclusivity on two of the strengths. They launched all of the strengths some time ago, and they have exclusivity on two of the strengths. So that would probably put them in a more vulnerable position according to the others. And Natco, remember, has already been litigated against. So these generally these litigations are quite long drawn. They result in settlements. So the street has probably factored the worst in, and that's why you're not seeing any kind of significant reaction to Dr. Reddy's, because most of the damage was already done the day Natco announced that they were sued.
Thank you very much, Ekta, for that point taken. Dr. Reddy's is flat. The damage perhaps was done before. But let me quickly highlight some of the companies where the lock-in will be ending from today till the end of the week. So Syrma SGS's lock-in ends today, and the stock is already under pressure today. It's down close to about 3.5–4%. The big trend that we've seen in the month of November is that companies, the new listings where the lock-in has ended, has seen very large block deals, particularly in these new tech companies. So whether it's Delivery, whether it's Paytm, or even Nykaa, and the street fears that this perhaps could extend to even the companies whose lock-in will be ending today. So Syrma SGS's lock-in ends today. Tomorrow you've got Venus Pipe, you've also got Tarson's Product, and Ethos and Go Fashion's lock-in also will be ending by the end of this week. Amongst all the stock price, it's Venus Pipes, which is double compared to its issue price, while Go Fashion's issue price is up almost about 70-odd%. So that is what you need to be watching from today to tomorrow. Also keep your eye out on NDTV. Now, NDTV started the day significantly lower, but there has been a big intraday recovery in NDTV. Remember, Adani's open offer to acquire NDTV begins today. The offer price at 294 was a significant discount to where the stock currently is. So, but since 1 o'clock, you have seen a lot of buying coming through. This, remember, was a 493 crore open offer. The stock, ever since the open offer was announced, had seen a one-way rally. The 52-week high on NDTV was more than about 570. But since then, it started declining. But right now, there has been a lot of buying coming through. Siemens is the other one reporting Q4 FY22 numbers. Vaishta is here with the expectations. Vaishta.
Hi, Rima. Thanks for that. Well, Siemens will be reporting its Q4 FY22 numbers, and this is because the company follows a financial year from October to September. The revenues are expected to jump 19% on year-on-year basis. Margins will also expected to improve to 12.2%. versus 10.4% on year-on-year basis. The revenue growth is expected to be driven by smart infra and digital industries verticals that they have. The order inflows are also likely to be driven by the short cycle orders. Healthy growth is expected across the gas and power, digital and mobility, which were impacted last year due to the COVID-led restrictions. Though gross margins could be under some bit of pressure owing to partial recovery of the commodity inflation, and the commentary on the order inflows, both in the domestic and international markets, and its conversion are going to be the key monitorables.
Thank you very much for that. With that, we're out of time in Midcap Radar. Thank you for watching Mutual Fund Corner when we return.